Housing prices keep rising, and most people think the biggest problem is how expensive homes are. But the real story might be something far more dangerous and much quieter. What if the solution being offered to fix affordability actually makes the problem worse? Because right now, in several countries and policy discussions around the world, lenders and governments are floating the idea of 50-year mortgages, and on the surface that sounds like relief. Lower monthly payments, easier approvals, more people able to afford homes. But what sounds like help can sometimes be a financial trap in disguise. And to understand why, you have to look at what long mortgages really do, not just to buyers, but to the entire housing market. For decades, the standard mortgage length has been around 30 years. That timeline was never random. It was designed as a balance between affordability and realism, long enough to spread out payments, but short enough that borrowers could actually own their homes before retirement. Extending that timeline to 40 or even 50 years changes that balance completely. Yes, your monthly payment drops, and that sounds like a win, but the total amount you pay over time skyrockets. A longer mortgage does not make a home cheaper. It only makes it feel cheaper in the moment. And that difference between real affordability and perceived affordability is exactly where problems begin. When buyers qualify for larger loans because payments are stretched out over half a century, home prices tend to rise even more. Sellers don't price homes based on what they cost to build. They price based on what buyers can borrow. So if buyers suddenly qualify for bigger loans, prices adjust upward. That means longer mortgages can actually push housing prices higher instead of lowering them. It becomes a feedback loop. Payments drop, borrowing power rises, prices rise, and now buyers need even longer loans just to keep up. What started as a solution becomes fuel for the problem. And there is something else most people do not realize.